Today I'm showing you my own moving average trading strategy with pivot points, market structure and breakouts. I've been using it for years and it works amazing. So make sure to give it a like and let's get down to business. For this amazing breakout strategy, we will need 20 moving average, 50 moving average and 200. These are my go-to moving averages and you'll see why. Okay, before we go to the advanced stuff, you need to understand why these moving averages actually work. So the first thing, this candlestick has crossed the 20 and 50 moving averages. The 20 is not really that important. The 50, the blue line, is very important. Once it actually crosses, usually the market reacts to it and a new trend continues. And this is what we can see. The candlesticks bounced off every single time it touched the 50 moving average and went towards the upside. Now the green 200 moving average is also very important, but because it's a long-term moving average, you will likely not have a lot of trading setups with it. But what you want to see is a breakout of the 200 moving average. So a bounce of the 50 and a breakout, solid breakout on the 4-hourly time frame. The candlestick actually has to close, no running timers, and it breaks the 200 moving average. This is substantial because now we know that the trend is definitely gonna go towards the upside. And although we did have a form of resistance over here, it doesn't really matter because the 200 moving average is crossed. Very likely we will see a push towards the upside. The breakout happens and it continues moving up. So after the breakout, how do you find out whether the trend will continue moving up? Well, it's simple because you can always have a look at the moving average crosses. Lower period moving average crosses the higher period 50 moving average, goes towards the upside, and then eventually the 50 moving average is crossing the 200, which is also a substantial move towards the upside. And if we move a couple of candlesticks forward, we can see that the cross has actually happened. The 50 has crossed the 200. The trend is now officially towards the upside. However, this is not the exact strategy I'm going to teach you. There's something else. Currently it's November, so I'll mark 1st of November with a red line. Now head over to babypips.com. In the settings time interval, please select 1 month and real time, and then we'll simply add the 3 relevant pivot points. So this was the first, this was the second, and here's the third. Over here we had a push towards the downside, never broke the pivot point line, went towards the upside, breaking past the 2 moving averages once again. Because of this move, we can also see that the moving averages did dip down a little bit, but never crossed 2 of them, which means that the trend is still continuing to move up. So now the strategy, how do you actually trade the trend? Once you have a nice cross of the 50 moving average, you can mark this area as a sensitivity area, right? So what happens, we have a push towards the upside, go towards the downside, we have a breakout over here. We can aim for another area of sensitivity. If we put this over here, we can see that this was a solid area of resistance. So as you can see, push, exhaustion, breakout happens over here. You can enter the trade straight away. You can aim for the top, which would be around 36 pips till the next area of resistance. And then again, what happens? A push and exhaustion back to the previous area of sensitivity. Notice where the wicks are. Previous area of support. This was a resistance, now became support, pushes towards the upside, goes down, pushes again, breaks past the previous area of resistance. What happens? Another push exhaustion scenario to the previous area of sensitivity just over here. We are always pretty much near the 20 moving average, and this is how you can trade. As long as it's making new highs, the trend continues, likely you can ride the trend. So let's take a look over here. Another area of resistance, clearly, right? We broke out over here, had a little pullback, boom, going towards the upside. But why wouldn't we enter on this big blue candlestick? Well, we know that likely if a strong push towards the upside happens, there has to be a form of exhaustion. So 82 pip move in the last 4 hours on EuroCAD, that's pretty damn big. Likely there's going to be an exhaustion. And as we can see, the next candlestick is red. It confirms there is a resistance zone over here. So this is the first one. goes towards the downside, reaches the previous area of support. So this is the support level where the 20 and 50 moving averages are at. What do? We can enter a trade on this bullish engulfing candlestick. The blue candlestick is swallowing the red one, and we could aim again for the previous area of the top level, which would be around 45 pip move. We wouldn't want to be entering a trade over here because likely we know that this will react again as a resistance 1 and resistance 2, right? We need the breakout. So if we want to trade the breakout, we need to find a strong bullish candlestick. So what's happening? Hits resistance, hits support, hits resistance, and then hits our 20 moving average, kind of trends, and then breaks through the resistance line. What do you do with this candlestick? Could potentially enter and try to gain 20 pips profit, but remember, this is a strong area pivot point, right? As we saw over here, they definitely react. Maybe this monthly resistance pivot point could actually push the market heavily down, and there could be a lot of sell orders lurking and trying to gain all your money. So you need to be careful. So I wouldn't be trading this breakout over here because the monthly pivot line is really nearby. There's not much space. So what do? You wait for the pivot breakout on the 4-hour time frame by the minimum candlestick closes, and it closes above this monthly area. You can safely have a breakout trade, and as we can see, it pushes towards the upside nicely. This could have been a substantial trade of around 65 pips, but it wouldn't give you the best risk to reward ratio because the market is moving quite fast. So the best thing you can do is wait for an exhaustion. The exhaustion happens over here. It forms a nice resistance area. Where does the pullback happen? Now, it doesn't happen over here to the previous area of resistance, but it happens where the 20 moving average is near the resistance, but more importantly, the monthly area of pivot line. Monthly area pivot line can never be ignored. You never want to ignore that. So if it pulls back, likely there's going to be a lot of buyers in this case lurking, waiting for you to continue selling because they're going to buy and take you out of the market. That's what's going to happen to you. So you have to be careful. So the best thing you can do is wait patiently, see what's going on. As we can see with this candlestick, we have a lower shadow over here, nice dodgy, and then the next candlestick is bullish. You could probably enter or wait for this bullish engulfing candlestick for a nice risk to reward ratio. So if we long this position, we want to always cover our 2 moving averages. For 1-to-1 risk to reward ratio, 96 pips profit already would have been reached, but potentially you could be aiming for the next area of monthly pivot line resistance, which would be 136 profit by the minimum. I mean, your stop loss could slightly be lower because likely the market is not just gonna dip down, it's gonna continue moving up, and your moving averages are gonna go inside your stop loss level anyway. And if you're watching me for the first time and think I'm some kind of joker and don't understand trading, well, you can look at my verified TradingView profile where we can see I just post free signals sometimes over here, and most of them are pretty damn profitable. This is USD Swiss franc. As we can see, had a little pullback, went towards the downside. Euro GBP also dominating. What we can see, Swiss JPY going up, AUD Swiss head and shoulders pattern went towards the upside. We nearly reached full take profit by 150 pips. Most people closed by then anyway. And if you ever want to trade like me, I made a 300-page ebook, plus I'm offering lifetime signals with the ebook. So if you're interested in any of it, make sure to click the links down in the description below. And peace out, lions. Have a wonderful day, stay safe, and goodbye.